Derivative Product Strategist, HDFC Securities. I welcome you all in for webinar. It is a special webinar. But before we start off, I need you all. My voice is audible to you, and we both are visible, and the screen is also visible to you. So आप जब मुझे confirmation दे देंगे, you can put it down into the question box, yes or no. तो हम लोग को confirmation मिलेगा, and then we can start off. So I'm waiting for the responses. All right, I think people can see us and everything is fine, so we can start. So as we all know, the exit poll is about to come, and the election result is on 4th of June. So this is going to be the biggest event of the year, right? So we all know that election results can significantly influence the market sentiment, economic policies, and ultimately the investment strategies, correct? So our goal today is to provide you with insightful analysis, practical strategies, and the tools that you need to navigate the election landscape with confidence. Okay. So during this session, there are three main points that we will be discussing and will be focusing upon. So इस particular session में हम तीन points पे ज़्यादा focus करेंगे. So the first point is we will explore how the market can react to different scenarios of the election, and then the a strategic approach, especially for the investor, those who want to stay invested during this period. And the last one is we are going to discuss the sectors which can remain into the focus. And of course, to navigate through all of this, we have Mr. Devarsh Vakil with us. He is a deputy head of retail research in HDFC Securities and has rich market experience of 2 decades. So I welcome you, sir.
Thank you, and welcome everyone to this webinar.
Yeah, so we will just start with the main point over here, Devarsh ji. Market क्या लग रहा है, या फिर how is the market set up just before this event? And इसके साथ ही हम लोग को ये भी जानना होगा कि पिछले कुछ इलेक्शन के सीजन में या फिर इसी during this landscape of election results, how the market reacted during 2019 or 2014. So वो idea भी हमें चाहिए होगा. So we will get the idea of historical trend and the current trend as well.
Right. So as you mentioned, elections बहुत important है, especially in a country like India, developing country. Elections set up the agenda for the next 5 years. So it is important that we navigate this event very skillfully. So now, if order to see how markets behave during the elections, there is this study which I have put up on the screen, where 6 months before the election and during the election month and 6 months after the election, what kind of performance the indices give. So when we looked at the last 5 consecutive elections, 6 months before the announcements, Nifty has rallied between 10 to 32% going into the elections. And this time when we entered these 6 months of elections, around December, Nifty was trading around 20,100. And from there, this time we have seen that about 12% rally has happened. Now we are trading near 22,500. So like last 5 elections, we have also rallied going into the elections. Average return of the last 5 years post elections is about 14%. So if we get the comfortable majority government, it is expected that over the next 6 months also market will rally. So every time, obviously, every period there is different contextual nuance, but broadly, if we see the last 25 years, markets have obliged us going into the election 6 months and 6 months post elections. So broadly 6 months market rally, but that doesn't mean that it is only one way move. There is considerable volatility within. So when you look at this chart on the screen, you see that on the election day of 2004, the next day market fell about 8%. On 2019-16 May, market actually went up 17%. For the last 2 elections, it has been quiet. whatever market was expecting, more or less they got it, and volatility was low. But 2004 and 2009 were a surprise, and that led to a large movement in the markets. So it is election day, and election next day there is considerable volatility if the outcome is not as per the market expectations. Now let's see volatility within the month. So in 2004 and 2009, when we see Nifty started at 1796, the May month, the election month, and ended around 1836. So about 546 points of volatility between high and low we got. Similarly, in 2009, about 1,000-point volatility, which was about 30% between high and low. So in 2014, we got 12% volatility and 8% in 2019. This month, it has been relatively quiet. This time, we have only 5.5% of volatility between high and low. Still, volatility is still there, and elections are going to announce on 4th. So if we combine that, this number can also go up. So the crux of the story is that there is going to be volatility on 4th and 3rd. First evening we will have the exit poll, so market will react to those events on the 3rd morning, and then actual election results will come on the 4th. So election results are very important, very significant. We are not trying to predict, but if we see the 2004, 9, 14 and 19, considerable volatility has been witnessed, and we anticipate that same kind of volatility is also going to happen this time. So it is advisable that we be very alert about this outcome. Sonali.
Yes, yes, of course. So this has been a trend that there is going to be volatility. So that is one point that I understood, that we have to be ready for the volatility. So how are the institutional investors positioned their money, sir, so that we will get the idea what is their trend or what is on their mind?
Right. So we have studied the institutional activities for foreigners and domestic institutions. For the May month, the foreign institutional investors have sold about 22,000 crore worth of equities in Indian market. So in last 6 months, earlier they brought in about 60,000. Out of 60, they have taken out 22, and now about 40,000 is the net long position in last 6 months from the foreign institutional investors. Compared to that, domestic institutional investors are been a continuous buyer. About 1.8 lakh crore worth of equities have been bought by the domestic institutions in the last 6 months, and in this month also they have been aggressive buyers. About 34,000 crore equities they have bought in the cash market. Now, focusing on the derivative markets, we see that the institutional investors were actually going quite short going into the election. As the election started, they gradually have covered their short position, and now, as we see from this chart, they are at 0.98. So more or less for every long there is one short, and it is now neutral. So earlier going into elections they were quite short, and now they have covered their short. So from derivative perspective, we are looking at the neutral position. Neither they are aggressively long or aggressively short from the derivatives, but from cash market perspective, we can see that there is considerable selling happened by the foreign institutional investors. If we get a very strong government, then we expect that a lot of money can come in from foreigners, especially the investors who follow the indexes like MSCI. Recently, as we know, yesterday the MSCI and the S&P, the rating agency, also improved India's actual outlook on the economy. So that will also help. Now people are waiting and watching these election results. Once those election results are over, we can expect some bit of flows from foreign institutional investors. The domestic investors have been net buyers, and I think they will continue because they are actually channeling the SIP money, which is coming in every month. About 20,000 crore of SIP monies is coming into the market, and domestic institutional investors are investing that money. Unless there is some big upheaval, we expect this domestic institutional investors to remain buyer at lower levels in the markets.
All right, that was a very good insight. So, sir, just before some time we talked about volatility. So, I want you to focus now upon India VIX. So, what's your take on India VIX, or इससे और कितना upside उसमें आ सकता है? Because right now it is considerably at a medium range, consider if we consider the previous year trends.
Right. So as you mentioned, India VIX is nothing but the volatility index based on the Nifty option prices. So what if you combine the all the Nifty options and check the implied volatility and try to come with the number that shows that the right now we are near 24, and many people are talking that it is moving up and it is higher. But when we study the history, we found that in 2009, just before the election, few days before the election, the VIX went up as high as 60%. In 2014, it was as high as 37%. In 2019, it was 28%. Right now, we are trading near 24%. So currently, VIX suggests that the market is expecting volatility, but not as high as previously. This is a number which can say that market is factoring about 24 divided by 12, so about 2% of volatility post-election results is built into these option prices. If you buy these options and if you expect more than 2% movement on the index, then it will give you some returns. If it is a movement plus or minus 2% on that day, you are likely to the theta decay will happen and you will actually lose the option premium. So if you are expecting a movement above 2%, then it is advisable to go for buying this call option. That is what is been suggested by India VIX.
All right. So we basically got a fair idea about how the market is set up. Now let's come up to the main body of this particular webinar. So there are a lot of investors having, huge portfolios. So some of them are worried now that, we may see some volatility. We are not sure what can happen. It's a binary event. So there are these investors and they want to know that, what can we do to protect the portfolio because, it's going to be volatile. So do you have any strategy for the investors who want to remain invested throughout the time?
Right. So it is advisable to remain invested over the longer term. See, the macroeconomic picture suggests that there is a Goldilocks scenario right now. India is in a sweet spot. If we look at the GST collection numbers, automobile numbers, power demand, the PMI numbers, all these suggest that there is going to be earning momentum in India. So there is solid macroeconomic environment. The corporate earnings are very healthy. The interest rates are near peak, inflation is under control, and most probably in the globally in US FOMC and Indian RBI are likely to cut the interest rate in the last quarter of this year. A monsoon has been the IMD has announced that the monsoons are going to be normal or above normal. So all this is leading to that we will have a broad-based growth. So it is advisable to remain long-term investment. But as we mentioned, this is a binary event. And if the election results are not as per the market expectation, we have seen a large fall in the market in the history. And same is the case this time also. So if you are a long-term investors and if you have a large portfolio, and if you would like to remain fully invested, it is advisable that either fully or partially you hedge your portfolio against such binary events. And this can be done easily by buying Nifty put options. So what is the strategy? Excuse me. So now we see that the markets have already run up. This year markets are up about 25%. Election results are unpredictable. If there is a event where the NDA, BJP-led NDA gets much lower seat than what market is expecting, there could be a large fall. Now, if you want to protect your portfolio, the simplest strategy is to buy Nifty put option. Right now, 22,000 Nifty put option for the 6 June expiry series is available around 400 rupees. 393 is the exact price. This price may change tomorrow, but more or less it will remain here. So the lot size is 25. So when you buy one put option, basically you are trying to hedge your portfolio to the extent of 5.62 lakh crore. Now, assuming your portfolio is large and suppose it is made up of large cap stocks, we calculated that for hedging a 1 crore portfolio, you would require to buy about 18 lots of Nifty put option. That will give you cost of about 1.77% of your portfolio. So by paying this almost 1.7% cost, you will be able to hedge your portfolio against an uncertain event, which if it turns out to be much worse than market expectation, if there is a very weak government and if there is a large fall into market, you will be protected. Use that profit, that proceeds from your put option compared to the loss in the portfolio. Use that portfolio money profit from these to buy back into the shares which you like, and your losses will be partially covered. So the strategy for long-term investors is to protect the portfolio using Nifty put options. Now, this is for the large investors. Here we are expecting this scenario where the expectation is a stable government. If it doesn't come, then a large fall can come. But likely chances right now, market is going into a mindset where BJP-led NDA is going to get with between 320 to 380 seats. So that would be a expected scenario. We don't expect much volatility. If NDA gets more than 400 seats, which is not now being discounted into market, then there could be a one big rally into the market. So this is the current setup of the market going into the elections.
All right. Yeah. So we saw the strategy that the investors can take up. We saw the scenarios where the small investors can take the insights from. So, sir, you showed us three kind of possibilities that can come up into the market based on the election results. So now, can we come upon the factors sector side? So which are the sectors which we have to focus upon during these various kind of outcomes that can come from the elections?
Right. So let's assume that there is a strong government, the ruling party comes back to the power with large majority. Then what we have seen is that usually these PSU banks, real estate metals, they have been doing well in anticipation of this government coming back into the power. So these capex related, infrastructure related stocks, PSU stocks, stocks of select corporate houses which are considered conducive to this government, they are likely to shoot up if there is more than 400 seats by the ruling coalition. Then the focus will shift towards the 100-day agenda and the budget. These two will play a crucial role in determining the outcome of the next 6 months. But we expect that if this current dispensation comes back into the power, the focus will remain on higher FTI and PLI schemes and these kind of sectors, which is related to the capital goods, PSUs, banks will continue to do well. Now, if we get a weak government, if we don't get a very strong majority of one party, then what will be the outcome? That is also a very important question to ponder. We think that if that happens, the focus will shift towards the social initiatives. The funds will be diverted towards more subsidies, higher tax breaks will be given, and in that scenario, it is advisable to look at consumption stocks. The lower income from the government and higher expenses will also raise question about the current fiscal path, and it will lead to some kind of inflation worries as well. So sectors which are likely to do well if the weak government is there, then IT, FMCG, these kind of sectors which are underperforming right now, they may do continue to do well. Now, here is the chart which is of the subsidies and the capex for the track record of this government. Now, if you see the last 5 years, these blue bars are suggesting that the total amount of money spent on subsidies is coming down, while money spent on the government capital expenditure is shooting up, and now it is as high as 23% of the government's budget. So if the same will continue, this capex will remain high. If there is a strong government, that means PSUs, PSU banks, capital expenditure related stocks will continue to do well. And if a weak government comes, this subsidy number, which is going down, will start coming up. That means consumption related stocks which are underperforming will start doing well.
All right, so we have got a fair idea of sectors and overall market. But now I want to touch upon a question which can come from a fresh investor. So I would like to ask right now to you that barring all the volatility of elections and all of that, if I want to invest freshly right now in the market, is this the right level?
So markets are relatively at a higher end. It is advisable that if you are a new investor, you should not put all the money lump sum into the market right now. It is advisable to space your investments. The new investors, it is advisable to start with the DIY SIP or the systematic investment plan into select stocks. We have reports ready where we have recommended some stocks as a investment picks. You can start putting a fixed amount every month into next 6 months. It will be a gradual investment. It will, the dollar cost averaging principle will work for you, and you will be able to build a good portfolio. Right now, the concerns about the market is not from the local uh, government or local setup. Provided we have a stable government, the macro concerns, the geopolitical concerns, and also election results coming into the US are the major concerns, and valuation is also a bit of a concern. So, in order to navigate these worries, the ideal strategy is to gradually invest into the market over the next 6 months via systematic investment plan.
All right, so SIPs are the answer. So that's nice. So I think we have touched upon most of the points that we had pointed out at the start of the webinar. So thank you, Devarshi, for such insightful information. Now, audience, remember, while elections can bring uncertainty, they also present unique opportunities to astute investors. So now I hope that we are more equipped to make use of those opportunities. We have got so many insights in today's webinar. So now if you have any questions regarding all of this topic, or if you want to get your queries resolved, you can put down into the question box and we will try to answer them. So just to mention over here that this particular webinar is being recorded, and as soon as this ends, the live streaming ends, it will be uploaded on the YouTube channel of HDFC Securities. So you can access the recording anytime. If you have missed any part, you can go and access the recording anytime. This is also being live streamed on YouTube. So, you can just uh, uh, take it backwards. And if you have missed any point, you can go and listen it over there as well. So I'm
So
waiting
there,
for the questions. Yeah.
so there is one question which I can see is that where can we find the investment ideas? So HDFC Securities website, you can go to the research section, and where there is all the reports, our work has been uh, hosted there. You can go to the website and check our research there. Yeah, Sonali.
Yes. So there is one more question. What is your view on IT and oil sector?
Right. So right now, the because of the delay in getting orders from the global giants, the Indian IT companies are under a bit of a pressure, and that's why we are a little cautious on IT. We have usually add rating on many of these stocks. That means we are waiting for them to fall about 10% before they become buy. The oil and gas sector is actually looking quite attractive, depending upon the current government. If they come back with a higher majority or a stable government, then oil marketing companies will be a good attractive investment opportunities.
All right. So there is one more sectoral question. How do you see PSU bank stocks performing? They are already on a high. So what's your view on that?
Right. So it is true, PSU banks have outperformed compared to private sector banks. But if you see, generally, banks have actually underperformed the Nifty. Last election results, when elections were there, Nifty was trading around 10, 11,000 levels. From that, Nifty has already surpassed and they are trading almost double than that level. So from 11, it is now 22 odd, 32,000 or 22,500. While Nifty was trading around 30,000 levels before 5 years. Now still from 30, it has moved to 48, 49,000 levels. So if you look at the little longer time period, banks have actually underperformed Nifty. Now the balance sheet of the banks, all big, large 15, 20 banks, combined NPA is much lesser than the 1%. That means new incremental NPA is not going to come soon. The operating profit is going to result into net profit. That means, relatively speaking, we like banks as an investment idea over the next 6 months, 12 months. I think banks are going to lead the new rally and it is going to help us help the Nifty going forward. It is about 40% of the weight in the indices, and I think that is going to increase from going forward. So PSU banks and especially the private sector banks which have underperformed are looking good for a longer term investments now.
All right. There is one more question that which sectors are seeming good this year for long term?
Banks, PSU banks, as we just mentioned, and now if we have a last 2 years we had a relatively patchy monsoon. This year it is expected that the monsoon is going to be higher than the long term averages. That means there will be rural income that will help the rural consumption. So sectors like FMCG, fertilizers, agrochemicals, and automobiles, agri machinery. These are the sectors which are likely to take lead for next 6 months, depending upon the spatial distribution of the monsoon and availability of water. We may expect good rural income this year. So if somebody were to looking for a new ideas, I think this is the area where they can fish. They will get good opportunities here.
All right, all right. There is one more interesting question. Somebody wants to know if the market can go to the low levels like we faced during the COVID times.
So if there is a sudden withdrawal of liquidity, if there is some global catastrophe like COVID, it is always possible that market react very negatively. But I don't think they will remain at a lower level. Given what I have just discussed, the macroeconomic situation of India is so strong that the correction will not be a very strong one or a very lasting one. If right now the positioning is that a lot of money is waiting on the sidelines to get back into the market. So if there is a serious correction of more than 4 or 5% into indices, I expect this money which is on the sideline to rush into the market, and that will support the market at lower level.
Yes. There is one more sectoral question. What is the view on metal stocks if the government comes back with the lower majority?
So metals are a globally traded commodities. The current election may not have a lasting impact on metal stock prices. It is more driven by the international prices. Now, international metal prices are actually driven by what is happening into China. Recently, China has started relaxing its policies. They have reduced the amount required for the down payment for mortgages. So, at a lower down payment, people can buy the residential units there, and they are nudging the local government to uh, absorb the excess real estate supply which they have. These are relatively positive factors for metals, and that's why metal stocks have started performing. If this continue, if China continue to give more reforms and their economy come back to the growth of around 5-6%, that will help the metal sector. So rather than local factors, I would advise you to look at global factors, especially what is happening into China and US. That will determine where metal stocks will trade.
Yeah. So there is a question from the perspective of traders. So the viewer is asking, is it advisable to do trading on 4th June during the result time?
So if you are an expert trader and if you can manage the risk, it is advisable because it is going to be very volatile. What happens is that in the morning session there will be some early trends that will be coming on various news channels, so that will show some kind of picture which will market will try to discount. Now as more and more rounds of the counting happens, the picture will become clearer and clear, and that will lead to some kind of a large move into the indices. So if you are an expert trader and if you can navigate the volatility, then obviously you should trade. But if you are uh, a new trader, then I think it is advisable to remain your on the sideline or reduce your trade size for that day. Usually if you trade 1000 shares, trade 500 shares only. If you are trading 10 lots, it is advisable to trade 5 lots on that day. Once the event is out of the way, you can go back to your previous lot sizes.
Yes, that was a good suggestion, sir. So now there is a question, what will be the impact of global factors before and after election results for a period of 1 month?
So 1 month, I don't think there is any major global event is scheduled. Today we got the Fed beige book data, and more or less now it is discounting that over the next couple of months there will not be any interest rate cut. At the end of the year, we may have a one interest rate cut from the US. So globally, the most important variable to measure is right now or to track is the what happens with the US interest rates, whether they come down, what happens with the US treasuries, and its impact on the liquidity. Right now, the market is discounting about one interest rate cut at the end of the year and ample liquidity to trade into the markets. If that doesn't fructify, if inflation shoots up into US, that will result into delay in interest rate cut and that may result into correction. Now, if you have been tracking markets lately, we have seen that the interest rate expectations have come down and that has resulted into some correction into US market. US Dow Jones indices have come down from 14,000 levels into 38 odd levels because of the reduction in cut in interest rate expectations. So it is better to look at that. But over the next 1 month, I don't think there is any major event. The result season is almost over there also. We are also at the fag end of the result season. So now market is going to discount the India's election results and post that if there is a strong government, what is the 100-day agenda? That would be the focus of the markets.
Yes, all right. So people want to know your view upon the insurance sector and pharma sector.
So insurance sector is a very interesting sector. Government policies are there, and I think foreign institutional investors also want to build their positions there. These are the sectors where institutional investors actually like to build a long-term position. So at lower levels, there are stocks which are under our coverage. You can refer to them on our website. We like some interesting companies in the life insurance as well as the general insurance space. So as such, we have a positive view on insurance as a sector.
Yes, there was a question for pharma sector as well.
So pharmaceuticals also has done quite well. The compared to the global pharma, where Indian companies who are actually catering to the regulated markets of US and UK, they have been struggling in the past, but now they have also started doing well. Recently, we saw numbers from many large companies in the Indian pharma space. Large cap companies have done good in their quarterly results. Domestic companies are actually growing and they are attracting higher valuations. So we continue to like the portion of the pharmaceutical companies which are offering their products into Indian markets. Companies like the companies who are into domestic business. Uh, that's the segment you should focus on.
Yes, of course. So there is one more question. Can we invest in balanced advantage fund during this election period?
Yes, so it is advisable to, if it all depends upon your risk appetite and your asset allocation. If you have a medium kind of a risk appetite, and if you have about 1 year kind of a horizon, then it is advisable to look at the balanced fund.
Right. So there is one more question. It is regarding the Nifty level. So what is the yeah. So what is the support and resistance levels that we have for Nifty?
So if we have a election outcome which is not as per the market expectation, and if there is a fall, right now we are trading around 22,500. If there is any adverse market outcome, then 21,800 is a very strong long-term support. We had already tested that level 3 times. Unless it is a major disaster, we can expect that market will find support there and recover. At the higher level, resistance is at 23,100, the all-time high. If it is not a very strong one-sided mandate, then even if there is a rally, we can expect that market to find resistance near all-time highs.
All right. So there is one more question. What can be the effect on mid caps and small caps?
So mid caps actually going into this election, there has already been some correction. Now, as I mentioned, that if we get this scenario where BJP led NDA gets about 320 to 380 seats, that's what is the market going into the elections, then mid caps can do well as the event led uncertainty is over. If we get these two scenarios, then mid caps will start doing well. If we get the third scenario, then there will be a severe correction into mid caps. So depending upon these outcome, we feel that this will be the action from mid caps. Uh, but generally, if companies which has announced good quarterly results, if the stock prices have corrected, and if we don't see much election-related uncertainty, it is expected that from now, post-elections, mid caps will start attracting flows from investors.
Yes. Someone wants to know that which sectors looking good for very short term period.
Right now markets are actually going, we are seeing that there is a liquidation is happening. A lot of people are reducing their positions, and that's why we are seeing that the market is actually into the downturn. Today there was a nifty expiry also. A lot of positions have been squared off. We have not seen any large rollovers into the next series. From immediately to play the market events, we have come out with the derivative strategies. You can use them. If you want to trade individual sector or a stock for elections, if it is a positive outcome, you can use PSU stocks, defense stocks, or PSU banks. If there is a strong government, that those stocks are likely to attract buying, and that you may make some money there.
Yes. So there is one more question. What if there is a coalition government?
So if there is a coalition government, then as I mentioned in the presentation, weak government will attract a lot of money towards subsidies. We may see a lot of tax breaks, and that will eventually help. Eventually, after a correction, if that were to happen, there will be first a correction into the market. Once that correction is over, then you can look at social initiative related sectors and consumption stocks. We will see FMCG and consumption related stocks doing well in that scenario.
All right. So there is a next question. Do you foresee return of FIS after election results with a popular government coming? In that case, will market touch some more high levels?
Yes, there is a possibility that if we have a strong government post elections, I expect that FIs to return to the market and start acquiring Indian equities. Incidentally, on the debt side, we have already seen that a lot of money has started pouring into Indian markets. From June, we are expecting Indian government treasuries to be added to the global bond indices like JP Morgan's index and Bloomberg index. And that means more and more foreign money will get attracted towards the debt side, and also eventually money will come into the equity side. If there is a strong government, we can expect a lot of FDIs into manufacturing and PLI schemes also.
Yes. So there is one more question based on the scenario. If the election result are not as per market expectations, then how much time market will take to get stabilized?
So usually it takes about a week's time to stabilize. It depends upon how various permutation and combination. If it is a very weak government, and if there is negotiation and we cannot come to a conclusion that who will be the prime minister, all that kind of uncertainty is there, then obviously it will take more time. But given the political scenario, it doesn't look like that should be the scenario this time. But if it happens, it will be a major negative for the market. Simultaneously, if there is a thumping victory from one NDA led, this BJP led NDA, then obviously there will be a sharp upside on the market. So market are going into this event fairly light. The derivative side, FIs have also neutral. The investors are also sitting on cash. So if there is a very big negative, then at lower levels, I am expecting investors to come into the market and start buying it.
Yes. So there is one more sectoral question. People want to know about EV automobile sectors. How is it going to do post the election results?
So again, it depends upon who is the which party comes into power, who is the union ministers. But we have already seen that the FAME 3 policy of the government, the EV subsidy policy, is in the works. And if that happens, then obviously EV sector will start performing. The companies who are players there will get benefit. So we'll wait for the election results and we'll wait for the new policy. What is the contours of FAME 3 subsidy policy? Once we have the details, we can take a call on which stock to buy.
Yes. So I think now we have covered most of the questions, and it is now time to wrap up this webinar. I really thank you, Devarsh sir, for such insightful information, and I hope that the audience has got a lot of insights and they will, they will be able to use all these points for their journey to, hedge their portfolios and take the new decisions for the investments and all of that. So I thank you and I thank all the audience for joining in and asking such nice questions and staying till the end. So thank you all. Thank you, Devar sir.
Thank you, Sonali, and thank you, participants. It has been a wonderful webinar. Thank you.
Yeah, thank you. Thank you all.